Hi, everyone. Thanks for joining us today for the webinar on the state of digital health. Next slide. Oh, next slide, Amanda. Great. All right. To kick things off, my name is Rachel Schultz, Director of Content Marketing at CB Insights. I'll be kind of running through a couple housekeeping items before turning it over to Amanda for the Q&A. Couple of things first. All attendees will be muted during the event. There will be a short live Q&A session after the presentation. We encourage you to submit questions via the Q&A tab in the Zoom toolbar. Don't worry about taking notes. I promise we'll send a recording within 24 hours of the webinar. If you're having technical difficulties, your best bet is to reach out to the Zoom Help Center. All right, next slide. So a little bit about CB Insights to start. Our platform helps companies discover what's going on in tech, design their strategy, and decide their next move. With unparalleled expertise and unrivaled data, our platform helps the world's leading companies find their next acquisition, investment, partnership, or solution. Next slide. All right, if you're interested in doing a free trial of our platform, I will be putting a link in the chat. You just have to click it and it'll ask you a couple questions and then you'll be right in. The trial lasts for 7 days. If you're a client and you have specific questions about what you see today, feel free to reach out to your dedicated customer success team. All right, next slide. All right, to introduce Amanda, our esteemed speaker. Amanda is an intelligence analyst at CB Insights, where she produces data-driven analysis and research reports on healthcare industry trends, with a specific focus on digital therapeutics, mental health tech, health plans and benefit management, value-based care tech, and more. Amanda holds a BS in chemical and biomolecular engineering from New York University Tandon School of Engineering. All right, great. Amanda, take it away.
Thanks, Rachel, and hi, everyone. Thanks for joining our webinar today. Let's start off with a quick agenda. So today I'll be walking through 3 main takeaways from our State of Digital Health report from Q1. First up, we'll discuss global deals in dollars, which fell in Q1 of 2022 after a record-breaking quarter in Q4 of 2021. Next, we'll dive into exit activity and look at what happened with M&A, IPOs, and SPACs. Third, we'll look at funding across geographies and which regions saw the biggest drop-off in funding. And finally, I'll save a few minutes for Q&A at the end of the presentation. So let's jump into the first finding. We'll be looking at global deals in dollars and what happened in Q1 of 2022. So if it's not already been made clear to you that the private markets have not been doing well in Q1 of 2022, whether through watching one of our previous webinars on the state of venture or fintech, or just following the regular news cycle, I will continue to be the bearer of bad news and say that the digital health sector has also not been spared since the beginning of this year. After a record-breaking Q4, global digital health funding dropped 36% quarter over quarter in Q1 of this year. So to put this into context, digital health saw the largest industry funding decline quarter over quarter compared to the fintech and retail tech sectors, which saw 18% and 11% funding decreases respectively. We also saw a decline in deals in Q1 as well. So I think it's important to look at these charts through a pre-pandemic versus pandemic era lens, especially in an industry such as healthcare that has seen accelerated growth among tech companies as the excitement around investing in healthcare has increased. So with this in mind, while funding did see a 6-quarter low, funding levels remained actually elevated compared to pre-pandemic times before or around Q2 of 2020. So if we try to understand what caused this decline in funding, we can look to mega rounds as one explanation. So mega round funding more than halved in Q1 of this year as investors backed fewer $100 million plus deals to digital health startups quarter over quarter. Among the companies that did raise mega rounds in Q1, these included Lyra Health, which is a virtual mental health care provider, and Alto Pharmacy, which is an at-home pharmacy delivery services company. At $4.4 billion, total mega round funding represented just 42% of all digital health dollars invested in Q1 of this year, which was down from 57% in Q4 of last year. So this is actually the lowest percentage by dollar amount that mega rounds have accounted for in the last 7 quarters. This certainly can help to explain the overall 36% drop in funding we saw in Q1. And I think this should really come as no surprise, as investors have become more conservative with capital deployment and move away from supporting larger stage or later stage deals, that is, where most of these larger funds typically take place. So diving into what happened across sectors within digital health, let's start with the mental health tech sector. This sector was on a tear in 2021, reaching $5.5 billion in total funding across 342 deals, which was up 150% year over year. Mental health tech funding obviously came into the spotlight last year, and for good reason. As the pandemic added new stressors to people's lives, mental health issues such as anxiety, depression, and stress were certainly exacerbated. And investors saw this as an area for opportunity to provide capital to companies looking to alleviate some of these issues with technology solutions, such as stress management apps and therapist workflow tools. So this interest obviously showed in 2021 with the record-breaking funding that we saw. However, some of that enthusiasm does seem to have slowed a bit in Q1 of this year, as we are seeing a 60% quarter over quarter funding drop to mental health tech companies, as well as a decline in deals. So similarly, funding to the telehealth sector also declined 32% quarter over quarter to reach about $3.2 billion, even as the number of deals actually increased nearly 12%. So reflecting on some of these trends, telehealth startups on average are raising smaller deals in 2022 year to date than compared to 2021. So overall, funding remains relatively elevated, again, as I said before in the webinar, compared to the last 7 quarters. And this short slowdown, I don't think should surprise anyone, especially for the telehealth sector, which we saw investment and adoption of the technology explode at the onset of the pandemic. So the sector was likely due for some type of funding correction eventually. Looking at the digital therapeutics sector, this area also saw a 53% funding drop quarter over quarter with a 19% decline in deals. So digital therapeutics, again, was another sector that caught investor interest last year, as it saw a 134% year over year increase in funding to reach about $3.4 billion collected in 2021 alone. And interestingly, another thing we saw here, so while the US pulled in the highest amount of funding at about $306 million in Q1 of 2022, Asia and Europe overtook the US in deal share for the first time since Q1 of 2019. So these two emerging markets saw more digital therapeutics deals than the US in the first quarter of this year. One sector that actually saw an increase in funding in Q1 of this year was health IT. So in this sector, deals in dollars were up 6% and 10% quarter over quarter. The US continued to dominate in this sector, accounting for nearly 83% of total funding and 73% of deal share, which was up 10% since Q4 of 2021. While overall funding in the sector was up from Q1, the average deal size was down slightly by about 9% in 2022 so far. And then, looking at other sectors, the only other sector that saw a slight increase was within clinical trials tech. But again, that's a smaller sector compared to the other ones recorded, so the increase wasn't that significant. Now, while it's still too early to tell if the slowdown is more permanent in the long term, I did actually want to pull in this data from our recent mid-quarter State of Venture report, which we released back in mid-May. So according to the run rate projections from this report, the funding cool down in digital health is expected to continue through Q2 of this year. So if you have felt like you've been seeing fewer funding announcements in recent weeks, you're certainly not wrong. As of mid-May, Q2 digital health funding was at $3.9 billion invested across about 235 deals. And by the end of the quarter, this funding is projected to reach only $7.8 billion, indicating a 25% quarter over quarter drop off from Q1 of this year. And so obviously we'll see how the quarter wraps up, but for now, things aren't looking too good. And again, this shouldn't come as a total shock as economic uncertainty mounts and investors continue to tighten their belts. Now, if I wanted to look more closely at what's happening in companies in the digital health sector, we can take a look at our digital health expert collection. So here is our expert collection on digital health, where analysts curate companies. And in this collection, we have nearly 13,000 companies included here and different sheets where we segment off companies. So if I wanted to dig into what's happening in the digital therapeutics sector, I could go to the sheet, look at different companies. And this is a really cool feature because this is where the analyst really lives with you inside of the platform. So these have been specially curated according to different funnel categories. So what you're seeing here is all of the companies segmented out by primary therapeutic focus area. So I can look at things like speech, dermatology, immunology, and the list goes on. So now moving on to our second section, we'll be looking at exit activity and what happened with M&As, IPOs, and SPACs, as mentioned before. So in Q4 of last year, we got a lot of questions around M&A activity and whether it will continue. And I think we got our answer as we saw M&A deals uptick slightly quarter over quarter to reach 138 deals. And more broadly, consolidation in the digital health sector remains elevated with M&A deals above 100 since Q3 of 2020. And this 7-quarter increase in M&A activity makes sense as the digital health sector has become highly fragmented and is due for a natural cycle of consolidation. So this trend could continue as the broader funding correction will force winners and losers to emerge across the sector. While M&A activity remained elevated, we did see IPO activity come to a complete halt, dropping 96% quarter over quarter from 23 IPOs in Q4 of 2021 to just 1 in Q1 of 2022. So a pretty stark drop off. And also among SPACs, we saw no SPAC deals occur in Q1 of 2022, which was down from about 6 that were recorded back in Q4 of 2021. So this drop in public exits is likely due to disappointing IPO returns we saw among digital health companies last year in 2021, as well as the increasingly turbulent public markets and the looming pullback in late-stage valuations. In fact, in the digital health sector, we did see median late-stage valuation decrease nearly 36% quarter over quarter in Q1 of this year. Meanwhile, early and mid-stage valuations appear to remain unaffected so far, as they actually increased 88% and 34% quarter over quarter, respectively. So while SPACs did take off as a popular investment vehicle back around Q2 of 2020, it's important to note that SPACs for digital health companies were broadly not as popular. In fact, digital health SPACs accounted for only 13% of the total SPAC deals done in 2021. So while there was certainly a drop off in deal activity, when we look at the larger venture landscape, it's a small portion of those deals. So digging into exit activity through a geographic lens, we saw that the US had the largest share of global exits, accounting for 55%. They were followed by Europe, which accounted for 23% of total exits in Q1 of 2022. And this trend remained pretty much on par with what we saw across all regions in Q4. So zooming into the European region, we saw 32 M&A deals and no IPO or SPAC deals in Q1 of this year. This regional trend followed suit with the macro global trend we saw and discussed earlier, with M&A activity remaining elevated while IPO and SPAC activity falls off. Asia also followed a similar trend. Notably, the region saw a slight drop in M&A activity while IPOs fell from 7 in Q4 of 2021 to just 1 in the first quarter of this year. So digging into what exit activity looked like across digital health tech sectors, we saw that telehealth accounted for 22% of M&A with 31 total deals in Q1 of this year. Again, we've seen consolidation increase in the last couple of years. Telehealth has become clearly a highly fragmented market with a lot of vendors building technologies, including telehealth platforms, remote patient monitoring devices, and even telepharmacies. So as winners start to emerge within the space, telehealth solutions become more comprehensive and expand into new geographic markets. We could see this consolidation continue. Moving on to the health IT sector. So health IT accounted for the second largest share of M&A in Q1 of 2022 with 23 total deals. M&A activity across other sectors recorded remains relatively lower, including within the digital therapeutics and clinical trials tech sectors. As investors continue to tighten their belts, as I mentioned before, fundraising will become likely increasingly difficult for startups. And anecdotally, we have heard from investors that they're advising startups to expect rough waters ahead with fundraising and to begin thinking about reserving the cash on hand they do have. So considering how startups may be looking at a break from fundraising in the near term, they could turn to solidifying business strategies in the hopes of reaching profitability if they're not already there to emerge as a winner through this market. And in a world where a lot of these winners and losers will begin to emerge throughout the quarters, it'll be increasingly important for companies to solidify that business stance through partnerships or acquisitions of smaller companies. So with that in mind, I actually wanted to take a look at the platform. So here what we're seeing is one of our ESP reports on digital therapeutics and diabetes. So this report, an analyst is looking at execution strength and market strength for technologies in a specified market and plots winners, so leaders, high flyers, outperformers as an assessment of where certain vendors sit in a market. And here I can click into a vendor if I'm really interested in learning more about them. It'll bring me to the platform profile. And this green check mark you're seeing here indicates that this company has submitted an analyst briefing. And this is proprietary information that the company provides on products, competitors, and more. And something even newer is our vendor connect feature, which allows you to connect directly with the vendor on the platform. And you can indicate if you want to have a conversation with them about purchasing a product, a partnership, or even an acquisition proposition. So here we can specify what problems we're trying to solve by reaching out to them. So let's say I work at a health system and I'm interested in investing in Omada Health as a digital therapeutic startup. I can type what I want to talk about and it'll go directly to the appropriate contact of the organization. So this is really cool. You can connect directly with vendors for all different reasons, all within the CB Insights platform. So moving on to our final section, we'll return briefly to funding levels, but looking at it through a geographic lens. So starting off this webinar, we saw global digital health funding drop by 36% quarter over quarter in Q1 of this year. And this trend held true across all individual geographies recorded. We saw funding decline quarter over quarter across all regions, including the US, Asia, Europe, and Canada. And looking specifically at the US, this is the largest digital health market. So funding to digital health companies here was down about 37% from a record-breaking $11.4 billion collected in Q4 of last year. So to put the US market into context, the size of it at least, companies in the US raised 5% more in Q4 of last year alone than compared to the second largest market, which is Asia, raised in all of 2021 combined. So the US is certainly still ahead by many measures. And, with that said, the US was actually underperforming slightly in Q1 of this year with a 37% decline compared to the overall global decline of 36% that we saw. So as funding dropped off more significantly, the number of deals actually remained on par with last quarter, indicating that investors wrote just as many, but smaller checks in the quarter. And despite being the most mature market, making up 56% of late stage deal share in Q1 of this year, early stage deals continued to make up the majority of total deal share in 2022 so far in the US. So despite the funding drop off in the US, deal share made up about half of total deals in Q1, which was up about 3% since Q4 of last year. And this was the first time in 4 quarters or a year that the US regained its spot for a majority deal shareholder across all the other regions. And so as US totals grew, deal share in Asia and Europe dropped off slightly quarter over quarter. As noted earlier, investors in the US started to write smaller checks in Q1 of this year. Part of this can be seen in the decline in mega rounds, which fell off from 34 in Q4 of last year to 21 in Q1 of this year. And mega rounds in Asia and Canada dropped off as well, while Europe held steady. So of all the regions recorded, which actually saw the biggest funding drop in quarter over quarter? The answer is Asia. Digital health funding in Asia was down 55% quarter over quarter in the first quarter of this year, reaching just $1.3 billion. And this was the lowest amount on record since Q2 of 2020. Similar to the broader digital health market, Asia had a record-breaking year in 2021, pulling in $10.8 billion across 806 deals last year. So moving on to the European market, European funding saw the smallest funding decline, which is tied with Canada, an even smaller market with a 19% quarter over quarter drop in Q1 of this year. And to dig in a little bit deeper to the deals that were happening in the space. So in Q1, France-based companies accounted for the most top equity deals with 4 total deals on the list of leaders. And then moving on to early stage startups, they accounted for 76% of deals in Europe in Q1 of this year, which was a 4 percentage point increase compared to 2021. And in Asia and Canada, early stage deal share also increased, whereas US early stage deal share actually saw a decline year over year. And just to quickly summarize what we discussed today, global deals in dollars were down in Q1 of this year from a record-breaking Q4 of last year. We looked at exit activity. We saw M&A deals hold steady, while IPOs and SPAC activity completely dropped off in 2021 so far. And finally, funding was down across all regions, with Asia seeing the largest Q over Q drop in funding. So with that, I'll spend the next couple of minutes fielding the chat to answer a couple of questions. So let's take a look what was submitted. Okay, so I think this is a good first one here to address. So what technologies or sectors do you expect to receive the most funding in 2022? Yeah, that's a good question. So overall, I think it's difficult to say this early in the year. Looking at the funding drop in Q1 and the projected funding decline through Q2 that we saw with the mid-quarter update, it looks like there will continue to be a slowdown in the near term. How long that slowdown will last, we can't say for sure at this point. But despite the bleak market outlook for digital health, I do see several areas for future investment opportunities. And I think one being technologies enabling home healthcare delivery. So these things include remote patient monitoring, at-home testing, durable medical equipment delivery, and other technologies. And so historically, I think home care services have been associated with the senior population looking to age in place. But with with the widespread shift to patient-centric care that we've seen in the past few years, this has really put pressure on payers and providers to consider a similar model for all individuals in order to enhance things like care accessibility, convenience, and cost. And obviously then, we also saw this shift accelerated by the onset of the pandemic, as hospitals faced increased pressure to prevent the spread of the virus and lower the burden on healthcare workers by scaling back in hospital care and moving to places like the home. And so I think, you'll continue to see investment in technologies that are enabling that shift of care. Another area that is unsurprisingly, I think, going to continue to be popular is women's health. So interest in women's health or the women's health space isn't completely new. We started to see traction pick up last year and really accelerate this year amid the recent current events. And we see plenty of early stage companies developing solutions across women's health. These things include things like menopause, sexual wellness, maternity health, and the list goes on. And then I think one last area of interest is within technologies targeting underserved populations. So one that comes to mind is the Medicaid population. So a company such as CityBlock Health, obviously we saw them gain a lot of traction last year. They're a value-based care provider targeting the Medicaid population across several markets. And also a younger player, which actually recently they just raised the Series A back in Q1 of this year, is Homeward Health. This is a company launched by ex-Livongo executives, and the company is providing virtual and in-person care to people in rural America. So again, another typically or historically underserved population. So I think we have time for one quick more question. So let's see what we have. Okay, I think this is probably a question that a lot of people want answered. So do you expect funding to the digital health sector to fall back in 2022? Yeah, so again, I think it's really difficult to make a prediction with only one quarter of data and look at what's going to happen across the rest of 2022. But from the data that we do have so far, we obviously have seen the quarter over quarter drop off in Q1, as well as a year over year drop off. So funding in Q1 of 2021 was actually nearly 18% higher than in Q1 of this year. We also saw that preliminary Q2 data to show the continued slowdown of funding. But again, I think it's important to keep in mind the original comment I made at the beginning of the webinar, where 2021 could have been an exceptional year of funding activity as the pandemic really accelerated funding to the digital health sector. So keeping that in mind, I think we'll continue to monitor the data that comes in during Q2. But for now, I think it's safe to say that we're seeing a slowdown in the near term. How long that slowdown lasts is unclear. So we'll see what happens with the Q2 data. But with that, I see we're almost at time. So I'm going to pass it back quickly to Rachel for a few closing comments. Thank you all for joining today.
Great. Thanks, everyone. And thank you, Amanda, for sharing your insights. And thanks to our audience for joining us and submitting your questions. Just to remind you, we'll send you the recording within 24 hours. Be on the lookout for it in your inbox. Thank you and have a great day. Thanks, everyone.